Greetings, fellow investors. Welcome to the Financial Podcast. My name is
And
Lukas.
my name is Markus, and today we're going to talk about shorting and short positions.
So, first, let me ask you this. Have you watched the movie The Big Short? I know I have several times, but I also know that I didn't really understand what shorting was just based off that movie alone. So, I would really much appreciate it if you right now stop the video real quick, put it in the comments. Have you watched the movie and did you understand what shorting was just based off how they explained it in the movie? So I know if I'm just dumb or what the situation is over
Well, I
there.
certainly didn't get it either the first time. I got most of it, but not all of it, especially not the shorting part. So if you answer the
Hmm.
question, please just don't go to like Wikipedia or certainly Investopedia or something and just type out what is a short. Try to remember how it was in the movie and see if you really remember how they explained it and if you got kind of what a short is. Because what a short position actually is fairly simple.
We'll jump into it now and explain what it actually is.
Yeah.
So do you want to get started?
What a short is actually very simple. Like the core concept of a short is basically a short position, which means that you are confident that a share, for instance, or a financial security is going to drop in value shortly. So what you do is
Hmm.
that you have this security or financial instrument and then you sell it for a price just before it drops in price, and once it has dropped, you buy it back, and then you
Yeah,
pocket the value in between the sell and the buy. So you basically just
exactly.
got a profit for not doing very much,
I
actually.
I tend to think of it as usually when you talk about you buy low and you sell
Hmm.
high. Well, this is sort of reversed
Hmm.
because first you sell high and then you buy low. So
Yeah,
you do it in the reversed order. But of course, the risk with taking a short position is you have to pay.
I think we should probably stop with this. Correct
Mhm.
me if I'm wrong in the comments, but I'm fairly certain that actual shorting, like if you use the term shorting financially, you are probably a very serious investor. You're not just some guy with a computer buying and selling stocks, because what you need is actually a stock loan department which you can for a while borrow the stocks so that you have them, and then you can sell them at a high, and then once they have dropped in value you actually buy them.
No, but
That doesn't sound to me
uh,
like something your average investor could do. You should actually probably be almost an institution or a very like a registered trader to do that.
wait, now I'm not
Maybe you got some
entirely
points.
sure, but like most day traders can do this. Like at most online brokers,
Yeah, I mean they
I
can
would
do it,
say.
but it's not this. It's not exactly the same, so to speak. That's more on a lower level, I'd say, because that's basically that you have the shares, you sell them high, then you wait a while and you buy them low. But that's kind of also a short position. But if you're talking about the real term, like how
Yeah,
institute,
that you borrow the
yeah,
shares and then you. But I would say that you can short shares as well on a lot of platforms, even if you're just like your average Joe. I might be wrong as well, so correct me
yeah,
again if I'm wrong.
this is just how
Let
I
me check
understood
this.
it at least, but it makes really no difference because the concept is still the same. The only difference is that if you're an institution, you usually borrow the shares. You don't actually buy them. While if you are like a day trader, say, and you're not registered, then you probably have to actually buy the shares and then resell them. Because there's a difference, and we're not going to get too much into that, but there's a difference between
Mm.
naked shares and covered shares. And naked shares is banned at least in the US. I don't know any market that they are allowed in, but that means that you can basically sell the shares without actually having them and then buying them later, which was kind of weird. I'm not exactly sure how that works, but like I said, it's banned in the US anyway, so probably most other markets too. However, covered shares, you at least have to have the shares that you're selling at a high borrowed. So you have to have them in your position when you are selling them, and then you can buy them back and actually own them and probably sell them again in the future. So that's the
Yeah.
difference between naked and covered shares, is that naked shares you don't actually have to own the underlying product, but with covered shares you actually have to have them in your position, at least borrowed or actually own them when you sell them, so that you can later buy them again for a lower price.
I'll just jump in real quick and I checked it at least for example on eToro, which what I plan on using, you can't currently open short selling positions. So you were right about that. That this is not something everyone can do.
I guess that sometimes this is kind of what a day trader could do, like you said. So like the timing is incredibly important. So that might be why you can borrow shares, and so that you can sell them instantly. You don't actually have them in your possession while you're selling them, but maybe you're going to get them, and then you can basically sell them, buy them immediately. In a way, sometimes these things
Yeah,
moves incredibly fast. So I'd imagine that
yeah.
that could be a way it would work. But what I really want to say with is that I think that shorting is generally not something for at least beginning investors. You should probably look at something more like our dollar cost averaging video, which we will
Mm,
hopefully put out by now, and index funds videos like this. I think trying to short the market is something you have to be very skilled at before you can actually do more like options and in some regard ETFs, because you can definitely do this with shares. Then it's just that you have to own the shares, you have to sell them at a perceived high, and then you should be kind of confident that they will drop and then you will buy them back. It's as simple as that, but it's way more complicated in actuality, because you can never be sure when they have reached their high, and you can never really be sure that they are going to drop, and then eventually you're going to rebuy them. Okay, so Markus cutting in here. Unfortunately, we had some technical difficulties and Lukas had to go while we recorded this, so I'm just gonna finish it real quick. So basically, I think we've talked about most of the points what a short is. Mainly, it's a tool used by more professional investors. So I wouldn't really recommend it for new investors, because something like dollar cost averaging is way better for beginning investors or new investors, because that it's way less risky, because shorting is fairly risky, that you have to try to time the market, so to say, and sell the shares while they are high and then rebuy them when their prices dropped. This involves a lot of risks inherently, so I wouldn't really recommend it for new investors who probably are not so sure about what they're exactly doing. But basically, shorting is selling the shares at a high and buying them again at a low. And the way that worked in the Big Short is that while everybody was buying the financial instrument they talked about in that movie, the protagonists in the movie were betting against these financial instruments which everybody thought were they would never tank. So my ending question is, did you understand shorting from the Big Short? Or did this video help you? Do you have a better concept on how shorting works? Maybe you can rewatch The Big Short now with this information in mind. If you do want better investment strategies than shorting, if you're a new investor, I would suggest you check out our dollar cost averaging video or our index fund video. Those are way safer than trying to do this if you're new. Other than that, I hope you have enjoyed this video. Please like, share, subscribe, all of that good stuff. It really means a lot to us at this point, because we're so small and just starting out, so please help us out. Usually Lukas does this part, but I'm just gonna say we'll see you in the next one, and happy investing, everyone.